guys, welcome back to my channel, Forex Flossin', where you can find quick, simple explanations for Forex concepts. So today we'll be speaking about correlating pairs in the Forex market. Correlation is extremely important because if you don't understand it, essentially you could be doubling your risk. So what is correlation in the Forex market? It's the identification of pairs with similar or opposite movements. So if you take a look at our screen here, we have GU and GJ. They have a positive correlation. Why? Because they move together. As you can see here, we have an impulsive move down, a little retracement down. Looks the exact same for GJ. Alternatively, GU and UCAD have a negative correlation. Why? Because when one pair moves in one direction, the other pair moves in the opposite direction, as seen on our screen here. UCAD going up, GU going down. So a cool tool that you can use to determine which Forex pairs are correlated is found on myfxbook.com. They have a Forex calculator that does all the work for you. So this is how you use the website. Pairs that have a strong positive correlation, meaning they move together, have a percentage closer to 100. So, for example, AUD-CHF and AUD-JPY are a strong positive correlating pair. And alternatively, pairs with a strong negative correlation have a percentage closest to negative 100. And AUD-CHF and EUR-AUD are pretty strong. We can also find another one. EUR-SEK and EUR-AUD have a 91. Oh, but that's a positive correlation. Negative correlation, EUR-GBP and GJ. Yes. EUR-GBP and GU. GU and UCAD, like we stated earlier. So the correlations can be broken down fractally. I like to use the 4-hour. I believe it's more of a better gauge. I also put 80%. I'm only looking for the strongest. So anything with a negative correlation, I want to see 80% and lower, and a positive correlation, 80% and higher. And so why do we actually need to know if a pair is correlated? For example, if I wanted to take a long on GU and GJ, I'm doubling my risk because I'm basically taking the same trade. So what's the solution? I need to determine which pair has the best setup. One way to determine the best setup is by looking at the secondary currency. So in this case, JPY and USD. Currently, the US dollar is weaker than the yen, so GJ would actually be the better pair to take, in addition to looking at other confluences. Or if it's harder for you to determine which pair has the better setup, you can take both trades and split the risk. For example, if you're risking 1%, you would risk 0.5 on GJ and 0.5 on GU. Well, guys, that's all for today's video. I hope you enjoyed the content. Please like, share, subscribe, and I will see you guys on the next video. And remember, get into the 528 hertz frequency binaural music. I'm telling you, it'll change your whole life.